Welcome to weekly view on markets. Frontline indices consolidated during this week and mid-cap sector outperformed. Markets continue consolidation with positive bias. Support base has been shifting upwards on the charts and markets have priced in many negative news flows. PSU banks announced very good results and PSU bank index have gone up by more than 4% during this week. Many mid and small cap companies announced good results and they have gone up by 8 to 10% during this week. Any dip in the market is a buying opportunity. One has to be selective in stock picking. Common investors who do not have the expertise to pick quality stocks should invest through mutual funds. Nifty closed with a loss of 73 points at 25,722 for the week. Bank Nifty gained 76 points, closed at 57,776. Mid cap index outperformed. It gained about 1%, that is 594 points, closed at 59,825. Small cap index went up by around 0.70%, closed at 18,380. India VIX has gone up by around 4.83%. India VIX is at 12.15. Now let us look at sectoral performances. PSU banks gained about 4.69%. Oil and gas gained about 3.15%. Metals gained about 2.56%. Commodities, energy sector, infrastructure, public sector enterprises, public sector companies all gained around 1.5 to 2%. Manufacturing and realty sector gained between 0.5 to 1%. Healthcare sector lost about 1.14%. Auto sector lost about 1.1%. Private banks lost about 1%. NBFCs, pharma sector, information technology, defense, uh, consumer durables all lost between 0.5 to 1% during this week. Now let us look at technical charts. This is a daily chart of Nifty. We can see Nifty has crossed resistance at around 25,772. Now this line will act as support line and we can see Nifty has closed around this support line and it is likely to take support at around these levels and likely to go up in the coming week. If we look at the long term support, Nifty's long term support is at around 25,500. So even if there is a fall in Nifty, it is likely to take support at around 25,500. The overall bias is positive on Nifty. This is the chart of Nifty mid cap index. Mid cap index is also above the support levels. The support level is at around 58,500, and as long as it is above this level, the momentum is quite positive, and it is you can see the strong uptrend, and this is likely to continue as many companies in mid cap space are reporting reporting very good results. This is the chart of Nifty small cap index. Small cap index is trading around this resistance zone of 18,300 to 400. It has to cross 18,500 and sustain above it. After that, we will see good rally in small cap index. And by looking at the long term support level, this is support line. and long-term support is at around 18,000 level. So as long as Nifty small cap index trades above 18,000, it is a buy on dip. This is the chart of Bank Nifty index. It went up, then again small correction. Now it is trading at the support level of 57,700, and it is likely to pick up from the support level. And next week, SBI is going to announce the result, and SBI result is expected to be good, and that will give a boost to the bank Nifty index. Now let us look at some of the macroeconomic indicators. Forex reserves of RBI is at 695.35 billion US dollars for this week. It is down by about 6.92 billion US dollars. Foreign exchange rate is at 88.77. Rupee has weakened and dollar index has strengthened. It is at 99.53. So as rupee has weakened quite a lot, RBI has intervened in the forex market. We can see that RBI for forex reserves has fallen by 6.92 billion US dollars. So they have seems to have sold the dollars to stabilize the rupee in the forex market. That is why we see decline in RBI forex reserves. Brent crude price is at 64.77 dollars per barrel. Crude prices went up after US imposed sanction on Russia. But now the crude price seems to have stabilized. Gold is at 1,23,000 for 10 grams 24 carat. Gold prices after hitting all-time high have corrected about 8.6% in last 2 weeks. Many investors have been asking me whether they should invest in gold and silver. My opinion is that no, this is not the correct time to invest in gold and silver. They have already run up a lot in last 2 years. Their returns will revert to mean. The mean return for gold and silver should be at around 8 to 8.5%. So people get attracted by last 1 or 2 years return. They should not get carried away by past immediate return. They should keep in mind that the returns will get averaged out. FIIs have sold 2,102 crore during this week. DIIs have bought 18,804 crores in equity during this week. So DII buying is much more than the FII selling. On certain days, FIIs have been buying also. The FII selling has reduced. Fed has cut the interest rate in US by 25 basis points during this week during Fed meeting. But Fed chairman has expressed that uh, the next round of interest rate cut is unlikely in near future. Because of that, markets were not quite happy. The market has already priced in 25 basis point rate cut. That is why we see correction in global markets after Fed rate cut. GST collections for the month of October has come. It has come at 1.95 lakh crores. It is up by 4.6% despite government lowering GST rates last month. So government has expected that demand will pick up and that will offset the growth in government revenues GST. That is exactly what has happened. The GST collection have gone up. Auto sales for October have been good due to festive season. Many automobile companies have announced their sales for the month of October. They are quite good. So auto sector seems to be in a very good positive trend right now. Charts do not show any weakness. We have looked at the charts. There is no weakness on the charts. So investors need to hold on to their investments, and further upside is possible in the coming weeks in the market. Any dip due to some global news flow is a good buying opportunity. Investors need to have patience and be invested. Mutual fund investors should continue their SIP. This is all for this week. If you like my video, please subscribe to my YouTube channel. You can ask your questions. You can refer to your friends. We will meet again next week. Thank you.